big ticket buys in India's luxury housing market have been from the startup founders who've encashed or sold stakes in their companies. For example, Akash Chaudhary, co-founder of Akash Educational Services, who bought a bungalow in Delhi's diplomatic enclave at a whopping price of 137 crore rupees. There's Jishan Hayat, the founder of Topper.com, who recently bought a sea-facing apartment in Mumbai for 41 crore rupees. Umang Bedi, co-founder of Verse Innovation, which owns Daily Hunt and short video app Josh, bought a villa in Bengaluru worth 16.5 crore. Now, in the last 2 years, entrepreneurs and startup founders have joined the ranks of industrialists and Bollywood stars to buy some of the most expensive homes of India. So, upgrading to a better lifestyle might be a big reason for them to buy a luxury property. But the other big reason is the saving they get on capital gains tax by investing the profits of their stake sale in residential property. These benefits come under Section 54F of the Income Tax Act 1961. Surabhi Marwa, tax partner at EY, joins us to tell us how it actually works. So, Surabhi, just the basics first. What kind of capital assets can I sell and get this exemption under Section 54F?
Thank you so much for having me, Manisha. First of all, for the uninitiated, there are some rollover provisions in the Income Tax Act. They range from 54 to 54F to 54EC. We are talking today about 54F, and the difference or the most important part of this section is that you can sell any other capital asset other than a residential house property and then reinvest it into a residential house property to get a capital gains exemption. So that's the first one. If you're selling a house and buying another house, then you're not looking at 54F, you're looking at 54, and that has its own conditions. For 54F, how it works is you've got to have a capital asset, you've got to hold it for 2 years or more because it has to be long term, and then you've got to sell it and reinvest it within a certain time period. That time period is 1 year before the sale or 2 years after. Or you can start construction of your residential house property within a period of 3 years. So that's very, very important to know. One very big embargo under Section 54F is if you already have, say, 2 house properties as on the date of these stake sales that we spoke about, then 54F doesn't apply. So you can only, reinvest and get exemption under 54F if you have only one other house property in addition to the new one that you're looking to buy. And if that's the case, then the beauty of this section is that if you reinvest the sale consideration or the amount that you've got on sale of, say, stake sales or other shares, etc., then if you reinvest the whole amount, technically the entire capital gain can be considered as exempt. Now, if you've made a very hefty sale and you don't want to spend it all on buying another house, then the proportion in which you reinvest it, you can get a capital gains exemption in that proportion. So those are the 2 or 3 things that really need to be taken into account.
So important to know the time period under which you can actually reinvest the profit to get the exemption. And second, that you can't be owning too many properties at the time that you're buying. If you're owning one property, you can buy one more residential property, right? What if I sell more than one capital asset? So I'm assuming, let's say I sell some stake in my company, and then I also sell something on the stock markets, like my ESOPs or whatever. Can I invest all of it?
Yes. So you can club all of this and you can reinvest it into one house property. That's again a very big beauty. Now, a big trick question here that comes up is, can I buy 2? So I've got so much gain that I want to buy 2 properties and not one. The way this section is worded, and it's very cleverly done, someone did it very cleverly. They said that when you buy the first house property, after the reinvestment, if you purchase another one within a year or 2 years, and that's another confusion that the Tax Act has, then you lose the exemption. So technically, 2 parts to this. You can sell more than one asset. So you can sell your stake sale plus your ESOP plus other assets, and you can club it all and reinvest in one. But can you club it all and reinvest in 2? The better position is keep it at 1 and not at 2 because of the finer nuances of the section.
Okay, that's a very, very important point. Any other loopholes in this exemption or tax exemption that one should be mindful of? Or do you think that it could have been done better by the IT authorities?
So there are no loopholes, but there are lots of conditions. And there's one very important planning trick but not a trick. Somebody will come and beat me up. But very good planning opportunity. The first thing is the house that you buy to reinvest. You can't sell that house property within a period of 3 years. So please keep that in mind, because if you just you buy it and then you sell it off after a year and a half or 2 years, then the entire gain that you tried to save is taxable again. And that can be a big jeopardy that you put yourself into. So keep those conditions in mind. The second thing is, what if you can't reinvest within the time period I spoke about, 1 year before, 2 years after, and you feel, I really can't do it. So then the trick is that you put the money in a capital gains account scheme. It's opened by any public bank, and you can put it in this account scheme before the due date of filing of the income tax return, which is July 31 in India. And then you are safe and you can take that decision. So if I sell my house in February and I haven't been able to buy another house property for 5 or 6 months, please keep it in the capital gains account scheme in a public sector bank, so that it's guarded from guarded from capital gains, and it's clear that it's saved for 54F exemption. So that's something a lot of people don't know, and it's a very important planning tip that I'd like to give here.
No, this is a very important one. In fact, even I wasn't aware of it, despite doing all the research on it before the discussion. Surabhi Barwa, thank you very much for joining us for this Tax Explainer.
Thank you.
So Section 54F exemption can be used by anyone making a sale in equity, listed or unlisted bonds or gold or jewelry. So keep that in mind next time you make some profits on any of those assets. You can also make use of it by buying a second residential home, if not your first. Thanks so much for watching.